This is the Financial Statements Lab. For this lab, we're going to start with accounts and show how different transactions increase or decrease those accounts. Remember, at all times, the accounting equation will hold true. As good practice, I like to format my entire spreadsheet as currency, but without the dollar signs. I usually make it for 0 or 2 decimals based on what I'm doing. I really like to format it ahead of time because then all the numbers appear in a straight line and they're exactly formatted. Then I only adjust for those cells where I do something different, like a percentage. So I suggest you do the same. Now, I also suggest you start by putting these accounts and the initial balances on your spreadsheet. I like to think of equity in 2 parts. One is the ownership part. It could be common stock, preferred stock, etc. For now, I could have all the categories in what we call paid-in capital, but I'm going to call it common stock later because I know there's only common stock for my problem, so I may as well do that now. The second part of equity is the income piece. This could be revenue less expenses. I could actually have additional columns to show each of these accounts, but it actually would be too wide for you to see. So know that revenue would be the positive as it increases equity, and expenses will show as negative because they reduce equity. If I had a bunch of columns, I would have them all be positive, but then I'd add revenue and minus expenses when I do my check number. And for now, we have no beginning balance or retained earnings. That usually happens when a new business begins. Then look at this column on the right. This is where I put the check figures. I like check figures because they keep me organized. If I have total assets, less total liabilities, and less the total equities, I should have 0. So if this isn't 0, I know I messed something up. So I like to put this formula here, and I'll copy it down for every line. Now we'll use all these transactions to show the impact. A, purchase equipment on credit. In this case, it's going to be a long-term loan for $5,000. B, perform services on account, $3,000. C, pay for advertising, $2,000. D, perform services for cash, $1,500. E, pay $1,250 of accounts payable. And F, pay employees $2,000. As we go through the transactions, you'll see what happened. Transaction A is purchased equipment on credit. It's a long-term loan of $5,000. This increases the asset equipment, and it increases the liability long-term debt by $5,000. You really have to be given additional information to know what type of liability is being undertaken. B, perform services on account, $3,000. Typically, when you read the words on account, you have accounts payable or accounts receivable. They're both on account, and you have to know which one you're going to work with. Because we have revenue, we must be receiving money, so this transaction has to be accounts receivable. It also increases equity. And you can see on the right, I have a note saying service revenue. As I said earlier, I'd have separate columns if I had room, but since I know I'm going to use this information later, I'm going to make a note so I can deal with it properly later. Finally, know the balance is 0, which means I've accounted for everything properly. Transaction C, pay for advertising, $2,000. Since I wasn't told how it was paid, I'm going to assume cash. If it was accounts payable, I would have been told it was on account. So we're going to go with cash, and you can see the cash decreased. Advertising expense increased, but since this decreases income, it decreases equity. So because I'm using the one column, you see the negative sign. And you can see the notation on the side that names the expense. And my check figure balance is 0. Transaction D, perform services for cash, $1,500. This is the same as earlier, except the cash is increased instead of increasing accounts receivable. Transaction E, pay $1,250 of accounts payable. We decrease accounts payable by that $1,250, and of course the other side of the equation decreases cash. Transaction F, pay employees $1,000. Of course this decreases cash, and it decreases income by increasing expenses, so the account payroll expense is recorded and noted in that side column. Transaction G, received $3,000 from accounts receivable. So this increased cash and decreased accounts receivable. In addition to showing this, I want to point out that there does not have to be a transaction on each side of the accounting equation. You can have one asset increase and another one decrease. And as long as the equation balances, we're going to be just fine. Transaction H. Pay $2,000 of accounts payable. This decreases cash and decreases the amount that is owed on the account that is called accounts payable. Transaction I. Record depreciation expense of $500. We haven't really done this yet, but depreciation is an expense. Depreciation records the wear and tear on capital assets. Since the historical cost principle holds, we have to show that the amount paid for capital assets like property and equipment are recorded at the historical cost. But we also want to show that those assets wear out, so we're going to use a contra asset. This account is called accumulated depreciation, and it goes against the asset, which is why it is marked as a negative. So that negative value becomes more negative as we record the expense. Next, total up all the accounts and make sure that the balance still holds, which proves that your accounting equation works. Now all I did was copy and paste the account titles vertically instead of horizontally. This will help with the next step. Then all I did was use cell referencing to carry the account balances down. I like using referencing so that way when I make changes above, I don't have to worry about carrying things through. And of course, I always have my check figure. Then I use cell referencing to copy the totals from the income statement transactions. I deleted the ones that didn't apply, but that was only after I made sure that the total matched the total in the income column. Next, take the income statement information and create an income statement. You will notice an order in the listing of expenses, and as we move into more financial information, that order of expenses is going to take an effect. But for now, they're just listed in alphabetical order. Also, notice the title is for a time period and it covers the entire year, although it could be a quarter, month, etc. And see that there are dollar signs at the top of each column. Also notice the double underline that shows the purpose of the income statement. That is to show the amount of net income or loss. Next, we prepare the statement of retained earnings. We didn't have a beginning balance in retained earnings, but I'd put it here if I had one. Then we're going to add the net income or subtract the net loss if one existed. Then we subtract dividends, which are payments of prior earnings to the shareholders. Remember, these are not expenses, but payments of earnings that we've already recorded. Then we end up with an ending balance in retained earnings. This has the double underline because it's the purpose of the statement. Finally, we prepare the balance sheet. Remember, the balance sheet is as of a certain date and not for a time period. You can also see that I moved up supplies. This happens often. We have to move things around so we can organize the assets to current assets, which we always show in a separate line. We also have the non-current assets in the property and equipment accounts. Then we have a total for all the assets. On the other side, we always show a total for current liabilities and a total for all liabilities. Then we show the equity accounts for ownership and retained earnings balance. That balance is the one from the statement of retained earnings, not our beginning balance, because we've incorporated all of our revenue, expenses, gains, and losses in there. You can see that the total of liabilities plus the total of owner's equity is the same of total assets. Both are double underlined to show the purpose of the statement and to show that we have balance. Finally, if you did everything correctly, you see how the balances all carry from one statement to another. And you can see what will happen with additional transactions. Feel free to copy this to another sheet and then change the numbers. See how they change the financial statements. Testing this will test your understanding of the financial statements and let you know where you really want to concentrate and ask questions. That's it for this lab. Please let me know if you have any questions.